You just need to do by learning, right? Don't just sit and procrastinate and think this might not work. Just do it and figure it out. If I was in a situation where I had 2 months to leave a rented property and there's a shortage in rented properties, it's going to cause me anxiety. All I'm going to do is I'm going to bury my head in the sand and not talk to the landlord or the agent. So for me, it's about understanding that situation and reverse engineering it. You know, people do ask me, you know, do you work less than when you're in a job or whatever? I work harder than ever, but I really, really enjoy what I do. Honestly, every single day I wake up, you know, I'm blessed and I love to do what we do and I wouldn't change it.
Saif, tell me, over the last 5 years, how is it on earth that you can buy and sell 170 properties?
Simple. It's systems, processes, and also just having the vision to want to create something, want to do something, and then build a team around it.
Okay. So you've said that in a very beautiful, succinct way, but there's going to be a lot more to it.
Absolutely.
So I'm guessing you didn't build the systems day one and says, right, let's flick that switch and let's go.
Yeah.
So how did it get to that point where you are scaling at that level?
So a lot of it is trial and error. And I'll be completely honest with you, I never set out to do what we did. All I set out, so a lot of people, when they're starting out doing anything, they want to create this amazing business plan and they want to have this massive vision and all the rest of it. The reality is, if you do that, it almost becomes so overwhelming, you just end up procrastinating, not doing anything. I just set out to create something as simple as possible. I think simplicity is the best thing. And I just said, all I'm going to do is I'm going to buy a house and I'm going to rent it out. That's all I did. I didn't look for something below market value. I just went to an agent and I bought a property. That was it. Now, that was the start of what I did. It then, as we're kind of looking at the journey, it took me about 3 years to buy about 4 or 5 properties.
Okay.
And within the kind of 3 years post that, I bought about 165 or 66, generally speaking. Now, the reason there's that massive divide and disproportionality is because the first 3 years I was learning everything, right? So I would go around understanding what's the purchase process, what's the refinance process, but what does a deal actually look like? And just understanding the tenant demographic and the areas as well. That's what took me 3 years. But once I understood all that, once I kind of tested different things out, it then allowed me to map out the whole process. Let me give you an example. If you buy a house today, what's every single thing that you do from the time that you go to identify a property, to view it, to agree the purchase, to actually purchasing it, all the way through to getting it tenanted? If you sit down and create bullet points as to every single point, that's a process.
Yeah, there's a lot of steps, but you can all be broken down.
Exactly. And then there's sub-processes below that. And then if you want to go one step beyond that, you do all of that. Once you reach capacity, you take on a new team member, you assign some of that responsibility. So don't just give them tasks, give them the responsibility. You are responsible for purchase communication. You're responsible for, whatever it is, getting a tenant, etc. Then you can start to build a team and you're building a business. But the reality is, if you're a one-man band and you're trying to do everything yourself, that's not a business. You're self-employed.
Yes. So many people that get into property, they think about the value is long-term holding. So if we think about maybe what our parents or grandparents might have paid for a property, when they came to this country, or and we see what's happened to property price over the last, say, 50 years, for example, it's just astronomical growth that's happened. And whether that continues or not, our belief is house prices will continue to rise at least. So many people want to buy and hold. So what created the shift from actually I could buy and rent these to I don't want to hold anything, I just want to buy and sell?
So just to kind of explain the business model. So we've got 2 business models at the minute. From when we started to today, we've bought properties and we've held them, right? So the traditional, what they call buy, refurbish, refinance model to buy and scale a property business. We reached a point where we were happy with the property portfolio that we bought. We weren't buying that to replace our income or anything like that. We were buying that for long term, as you said, the capital appreciation, the wealth generation. The income from that is just to try and keep it positive cash flowing so it can pay off the debt. That's the key, right? So we were thinking, okay, but what do we do day to day? Now we've built the portfolio up, where does our sweat and time and effort go into?
Yeah.
And we thought, we've already got the resource, we've got the traction, why don't we buy and sell properties? So before we actually got into buying and selling, we actually started to buy, develop and sell.
Okay.
And we were finding, we were flipping houses, we were spending £100,000 on refurbs, we were building properties from scratch, we were doing all this. The time and effort we were putting into it versus the actual return was just very insignificant. So we did a few of that and we learned, and this is what I'm trying to say is you just need to do by learning, right? Don't just sit and procrastinate and think this might not work. Just do it and figure it out. And then we got to a point where I got properties that had a really good margin in it and I thought, okay, we can refurb. And then I thought, what about if we just sold this and let someone else do the refurb?
Yes.
And that was a kind of tipping point in the sense of we made the exact same margin as we did if we had held it for 6 months, refurbed it, gone through all of the headache to then sell it. And actually, the risk involved with doing that, spending all that money and waiting on the market is much higher. So that's when we kind of start to think, okay, our day-to-day could be trading while we're just holding onto this portfolio for the long term.
Yes. So it kind of evolved into that process. I remember the first property I ever sold in auction, because we had too many projects going on. And I was speaking to somebody about auction. They were saying, look, try and put it in. You're going to get a decent profit out of it. And actually what we made profit out of that probably wasn't that different from what we would have had we renovated and sold it. Because to be honest, the person buying it didn't really know what they were buying.
Yeah.
They didn't understand how much work was going to needed on it. They overpaid for it. And we still made a very good profit out of that. And I guess that's the thing with auctions. I say it's the domain of the experienced. But you get a lot of inexperienced people turning up at auctions as well.
You do. And I think the beauty of auction is it's a transparent process. You don't have a salesperson trying to sell this to someone, trying to convince them. All you're doing is you're putting a property into an auction, you're letting someone else perceive the value of that property, how much refurb is going to be required, whether they like the property or not. That's perception, right? So if people undervalue the refurb cost, that's not your problem. If people overvalue the end value, that's not your... But from our perspective, that is a really good transparent method. And a lot of people are like, why do you sell through auction? Because you get less. And we're like, we don't mind leaving money on the table for other people and making a smaller margin, but it gives us speed, it gives us certainty, money in the bank that's tangible to go again. And that's how we've been able to scale a lot as well.
Yeah, so it's doing lots of transactions as opposed to one transaction that's going to produce you a big chunky
volume,
profit.
basically.
Yeah, when I first got started in property, sort of around 2006 time, and when the market started crashing, I was trying to find lots of deals. So the first thing I did okay at was sourcing deals.
Yeah. And
in my head, it was a case of I've got to find stuff that's very cheap and sell it cheap.
Yeah.
And the bit in between is a little bit of profit for me.
Yeah.
For doing that. So let's take it back a few steps then. So what type of property typically would you look to acquire, to trade?
So predominantly our main criteria is residential property. So we don't really deviate outside of that. And that's not our circle of competence. So commercial, land, etc. It's not our circle of competence. We won Property Traders of the Year last year, actually, at the Property Investor Awards for a piece of land that we traded out. But that's a one-off thing that we did. But our general stuff that we do is residential properties, typically sub 400,000, typically. I mean, on average, I'd say around 150, 200,000 pounds. That's what we look at.
Yeah.
And it doesn't matter whether it's done up. It doesn't matter whether it's run down. A lot of people are like, look, I've got this run. It doesn't have to be run down. Mm-hmm. What it has to have is it has to have what we call, it has to be at a wholesale price or a trade price, as we call it. So I'm looking at, if, for example, we were going to sell this property in auction today, what would it get me?
Yeah.
And then I'll work the margin back from there. I'm not going to work the margin out if I'm going to refurb it. I'm not going to work the margin out based on, if it's going to go to open market. I'm going to work it out based on what we call the 4-week valuation or the auction valuation.
So it's as is property, 4-week valuation, what we're going to get if we need to sell this property relatively quickly. And then what sort of margin do you need to work to make that work for you? Is it a percentage or is it an amount of money that you want to achieve per transaction?
On average, we're making around about 12, 13% margin. So we're always between 10 and 15%. And that could mean we get lucky on one we get 20%, but also we get unlucky on one we get 5%, or we break even on, obviously on some. And I always say this to people, and it's hard to get your head around it. Risk comes from doing very little amount of deals. So if you're not doing volume, the risk goes up, because if you've got one property that you're flipping or trading or doing whatever you are with it, or even buy, refurbish, refinance, if that valuation doesn't come in, if you can't sell it, that's 100% of your projects that are at risk at that point.
Yes.
If you've got 10 properties on the go at one point and 1 or 2 have problems, that's only 20%.
Yes.
So for me, volume reduces the risk, and a lot of people don't get their head around that, but really volume is the way that we reduce our risk. So if we do break even or make a loss, whatever it is on 1 or 2, the other ones will blend it in, and overall we'll make a profit.
You can absorb it and cover it elsewhere. I was speaking to one of the very largest auctioneers locally a few weeks ago, and it was talking about the traders that bring the properties in. Often they guide them very, very low to really get the attention on the property. So let's say maybe they paid 100 grand for the property, but it might be guiding the auction at 50,000. So they're taking a risk, guiding it very low. Often it will sell over 100,000.
Sure.
But the point he was trying to make to me is, well, if they're selling 10 properties and they lose money on 2, but they make good money on 8, it all balances out. Very much similar to what you're saying.
But also, I think these people trust the process, and they know that, you know, it's marketing, isn't it? Really, at the end of the day, if you market something cheap enough, it's going to attract so many people. So, for example, I don't know, if you would buy a television today at £1,000, everyone knows that's the value of that TV. If you put that in a shop at £200 tomorrow, you know they're going to sell out.
Yes.
And a lot of supermarkets do that, fun enough, but without people realizing, to attract people. So they'll make a loss on something or break even to attract people to buy other things.
Loss leaders.
That's the loss lead. Yeah, that's exactly it. Now, with the properties, people know that they will find their price at auction. You know, you might have it on a day where there's the interest rate rise or something like that, and it's a very negative day. And you might, you know, on that day that you might not see as many people at auction. But the reality is 9 times out of 10, that property is going to find its value. So it doesn't matter whether you put it in a £1 guide, whether you put it in a 50 grand guide. If that property is worth 150,000 as it is, it will find its value.
So you strike me as somebody that's very system and process driven, as we spoke about as well, and understand tech and the use of tech in terms of in a business. So from your marketing and lead generation, are you the old school, how I used to do, which is like 100,000 leaflets at a time?
Yeah.
Or you Facebook and Google ads in terms of lead gen?
Very much website and Google ads only. So we've tried everything. We've had the billboards up. You know, we have some end terraces. We put all the billboards up. We've tried we've done all of that. The reality is, I think times have changed, and you know, we're looking at return on time as well as return on investment as well when we're looking at marketing. So from our point of view, it's website and pay-per-click via Google. Now, people don't realize this. You know, it could cost £33 a click on average, right? In this industry, it's
a very competitive market because the end profit is so big.
It's a high ticket item, right? So the price per click is quite expensive, and also people don't realize this as well. You only convert about 3 or 4% of the leads. So you might be getting 100 leads at £32 a click on average, as an example, and you're only converting 3 or 4% of them. So it takes, I think, cost per acquisition on average, we're anywhere between £2,000 to £4,000 at any given time.
Right.
So it's quite expensive, but like you said, when you land a good deal, it's a high ticket margin item, so it makes it worthwhile.
Yeah. And in terms of, so that's the medium you use.
Yeah.
The message that you put out there, do you target a certain demographic? People are less socially affluent, for example, or do you go very broad in terms of who you're trying to appeal to in terms of selling a property?
So we look at pain points, right? And pain points differ at any one point in the market. So right now, I think we've probably got about 7 or 8 pain points that's the hook, right? So the first one being landlords, for obvious reasons.
Yes.
And that's due to variable interest rates. So there's lots of portfolio landlords on variable interest rates, whether it's, I don't know, a landlord with Handelsbanken, for example. So that's a classic that we've been getting recently. So landlords are a big one for us. Probate is another one. So you can imagine when people are going through probate, you know, it's probably their executors or whoever it is. It could be, I don't know, a mother that's passed away and left her property to her son and daughter. That son and daughter, in their head, they've already spent that money. I don't know, it could be a £200,000 property, for example. They've already spent it. That probate can take 1 or 2 years. So they are so motivated because that time it takes, at that point that they can actually start to sell it, they're motivated to get their money because they've already spent it in their head. So we get a lot of that where they just need the cash out of it, and it's, you know, I need to buy this property, or I need to buy this, whatever it is, I need the cash out. So we get a lot of probate. Divorce is another one. We get a lot of people going through divorce, and they're forced to sell their assets. Now, one thing I'm going to say, I'm going to go through all of the kind of pain points, but one thing I'm going to say is within this industry, and a lot of people are like, but how are people selling their properties to you less than what they can get on the market? Let me give you this as an example, right? Let's just say you own a property, and for various reasons, could be divorce, could be anything, you've got 4 weeks to sell that property and get your cash out that property. You don't have any cash in the bank, but you need to liquidate that in 4 weeks.
Yes.
What would you do?
Yeah. Well, normally you'd think of maybe an auction might be a way to try and sell quickly. But an estate agent probably isn't going to help. But that's, for most people, you'd think that's going to be the way to sell it.
Yeah. So an estate agent on average is around 6 to 9 months to sell a property. And on average, 1 in 3 transactions will fall through. Yes. An auction, you need a minimum run rate of 2 to 3 weeks to market the property, and it may or may not sell at auction. So if it exchanges contracts, great. It may not sell, and even if it exchanges, it might not complete.
Yeah.
So there's a lot of uncertainty around these two processes. So the reality is the only other market is the cash buying world, which basically there's loads of competitors in it. So our company's called Property Buyers Today. A lot of other companies like We Buy Any Home, the property buying company, the classic ones. Now the reality is, from our perspective, we can buy a house in a week, 2 weeks, 3 weeks. It depends on your time frame.
It can be done quite quickly. Yeah.
It can be done really quickly. The quicker it is, the more risks that we take, right? Because we're not asking certain questions, we're not getting certain legal
You're limited
things.
on your due diligence.
Really limited. So we say to people, the price that you get will reflect the time frame you need to sell in.
Yeah.
And that's a big thing, really, for people to understand. So there is a market for us. And when we get people calling us in, the first thing we say is, we need to understand if this service is for you. We're not here to sell you the service, because down the line, if you don't need the service, down the line, you will stop communicating with us. So we'd rather, from the beginning, see, do you need this service? So I'll say, is your property unmortgageable? And I still do a lot of the calls myself. So is your property unmortgageable? No, it is it's perfectly mortgageable. Okay, great. Why do you need to sell? What's the stress that's causing you to sell? And then I'll kind of dig through. And if you come to me, Saj, and you say, no, look, I need to get the full market value. I've got the time I need, 6 to 9 months, and it's perfectly mortgageable. I'll say, look, I recommend going to a local high street agent. Simple as that. I'm not going to sell you our service. If you say I've got 4 to 5 months, or maybe a bit less, I'd say, look, why don't you consider putting into auction? If you come to me and say, look, I've got 1 to 2 months, or this is quite complex, I need someone to support me with this, we'll say, look, this is probably for you need our service, let's have a deeper dive into it.
Yes.
So we're quite upfront and honest with people about it from the beginning.
Yeah. That's interesting you take the calls yourself.
Yeah.
I mean, when I was doing a lot of direct-to-vendor marketing, the bit that I really enjoyed was the conversation with the owners. Because you can really get deep into, what's the people's circumstances. It's about building rapport and relationship. And they're only going to sell to you if they like you.
Absolutely.
If they don't like you, they are not going to sell to you. It doesn't matter.
So the best thing I get from the phone calls is you're absolutely right. I love the rapport building, but the biggest thing it gives me and the biggest advantage is I'm at the coalface of this, right? So before the media, before, all these people go out and talk about what's going on in the market, I can see the trends and I can see where the pain is and where the pain's starting to come from. So I'll give you an example. This was probably this time last year. We had a phone call from someone that wanted to sell, and the reasoning behind why he wanted to sell was he wanted to buy cryptocurrency.
Right.
So that was literally 1 year ago. So he was like, I need to sell really, really quickly because I need to buy crypto or whatever it is. And that's fine. People sell for different reasons. But the reasoning that people are selling is always changing, and we can see the different trends in the market. At the minute, are we seeing that there's a lot of financial pressure on a lot of people? There is, but it's not significant enough yet to cause anything significant in the market. So a lot of people are like, we're going to go through a crash, or they're waiting for a crash. The reality is we can see a lot of it on the front line, and we're seeing people motivated, but not motivated enough to start taking significant, haircuts on their equity, basically. So we're still in this transitionary period of who's going to fold. So the buyers are being really aggressive right now. So buyers are like, got all the interest rates and everything else going on. We need deep discounts. The sellers are also holding their ground at the minute. They're like, we'll give you 5-10%, but we're not going to go 20-25. Yeah. And we're stuck in the middle where our margin's getting squeezed. So either the buyers are going to have to start being more realistic on their purchase price if the sellers hold up, or the sellers are going to have to start to reprice things in. Yeah. And at the minute, we're still at this stalemate. Yeah. Within reason and in
that's a really interesting point there, and I agree with you 100%. We're probably at that point where we're starting to feel more and more pain, but not enough pain for people to say like the market's crashing out or anything like that. What do you think will probably happen over the next year in terms of people's financial positions, sellers I'm thinking of typically?
Yeah, I mean, look, the biggest pain right now is landlords, that's for sure, because there's not as much. So even the banks and everyone's pretty well capitalized. So people that have missed a few interest rate payments or capital repayments, for example, for their home mortgages and stuff like that, the banks are being quite lenient because at the end of the day, they're not in a position to start repossessing.
Repossession levels are very, very low.
Very, very low. So the pain is really coming in from landlords. And as I said to you, I touched up on, you've got Section 24, EPC, and interest rates really hitting hard. Interest rates, I'd say, is the biggest reason why people are selling right now.
Yes.
So from my perspective, I see a lot more rental stock coming to the market. Mm-hmm. A lot of homeowners are not wanting to move right now, and that's why you're seeing a lot of people renovating their homes, doing extensions, etc. Skips are all over people's driveways because they don't want to get off their fixed rates and get onto higher rates. So a lot of people are taking it on the chin and saying, we did want to move because we need more space. Actually, what we're going to do is put a wraparound extension or whatever. So I feel like we are still going to have a lack of good inventory in the market, in my opinion anyway, from what I can see and what we see on the ground. So for me, I think that the opportunities are landlords are going to need to relieve their pain there's creative deals to be done with landlords. Vendor financing is a big one, for example, and especially the retiring landlords and things like that. And I also think if you've got, sorry to say this, but if you've got the balls to do it, if you can buy tenanted properties and either wait out for the tenants to leave or work with the tenants to find them somewhere else, there's a lot of value to be unlocked in buying tenanted properties under its value, because it doesn't appeal to first-time buyers or owner occupiers. And then once you can take it from a market that's quite limited to only investors, and even then it might be the yield is so low, so it doesn't appeal to anyone that sits in no man's land, have a property that's vacant and almost you've opened up to investors, developers, owner occupiers, first-time buyers. There's a 20% shift in the value that you can knock there.
So when you're taking on a property, you're trying to resolve a problem.
Yeah.
And in some cases, resolving that problem means you temporarily have to take the problem on yourself.
Yeah, absolutely.
To free them of it.
Yeah.
And there needs to be more of a profit in it for you to make it worthwhile doing that.
Yeah. So we've had properties where, and this is just, by coincidence, we've had properties where we bought them, it was tenanted, it was undervalued because it was tenanted at really low rents. They've not historically changed the rents. And, after a couple of months, the tenant has passed away, for example. And at that point, we decided to sell it.
Yeah.
And we've had 30% uplift on that. Now, that was by accident.
Yeah.
But then at the same time, we've had properties where we've bought them, we've had a chat with the tenants, and the tenants are like, look, we're happy to stay in the property. We understand that you're going to do rent increases. We're happy to pay this because we can't move out to anywhere else. This is what we're going to have to pay.
We want to stay here.
And then we've worked with them to do renovations and stuff like that, or maintenance within the property. And that's allowed us to get the increase as well in value. So I think trying to solve those, and some cases we've bought stuff with problematic tenants where the landlord didn't want to deal with it, and we have to go through the Section 8 or Section 21 process and go all the way through. But again, there's an uplift in value.
You've got to build in the profit. I was speaking to one of our members of our mentorship group a couple of weeks ago about a property they're looking at with a problematic tenant. So it's part vacant and part occupied by this tenant who's not paying rent, who hasn't paid rent for years, and the landlord's had enough, they can't get them out, or they've tried, and I think they haven't registered deposit and stuff. They're all usual problems, meaning they're struggling to get them out. The tenants realise they can't get me out. So they're in a situation now that the landlord's tearing their hair out, and the investor's saying, what should I do? I says, well, look, if you're buying it with the current problem, you've got to build in, let's say it takes you a year and a half to get that tenant out.
Yeah.
The cost of no rent for that period of time.
That's right.
Legal costs you've got to go through, everything else you've got through, the pain and some profit for that. If you can build all that into it and it's still viable, then it makes sense.
That's a brilliant point. And I think that literally is a case of only take on a problem where you're going to get paid to take it on.
Yeah.
Don't take on a problem where there's not enough in it to get paid to do it. So that's a really, really good point.
And so with, say, a tenanted property, would you then trade that on in auction as it is, or do you wait to improve its value, i.e. have the tenant out and maybe...
Yeah, we'd wait to improve its value. And as I said, the value can come in three ways. So we'd have a chat with the tenant, explain this is now the market rent. That the reality is the landlord's not been putting up the rents, and see whether they can afford to stay in there. So affordability is the key. And if they can, then fair enough. If not, then we will actively, so we've got obviously the management company as well, we will actively support them to find somewhere else, right? And I think that's the key, is working with them. So we're not the type of person that will serve them a Section 21, say you've got 2 months to leave, because that's what creates friction and problems. Yes. We might serve them a Section 21 and say you've got 6 to 9 months to leave. We will actively work with you to find you somewhere. Yeah. And it's a lot more realistic as well. And they feel comfortable with that, because I've looked at it and I thought, if I was in a situation where I had 2 months to leave a rented property and there's a shortage in rented properties, that's going to cause me anxiety. All I'm going to do is I'm going to bury my head in the sand and not talk to the landlord or the agent. So for me, it's about understanding that situation and reverse engineering it. Or it could be that they're happy to stay in the property and the landlord hasn't done works before, so we'll do the works and we'll do the rent increase on the back of those works. So it's finding a balancing act. Or, as I said, it could just be that it's already optimized and we bought it at the right price, that we buy it and we can sell it on to an investor. But, if, say, for example, we bought something and it's a really high yield, we can sell it. But if it's a low yield, it's not optimized, we'd have to try and do something to optimize it.
Not going to work very well in the auction.
Yeah, absolutely.
Okay. So with the strategy you do now, do you see that as something you would continue and scale and grow? Do you see as a window of opportunity right now?
Yeah, so look, I'm two things that people need to understand about, how do they add value or make money through property? From my perspective, you either buy your equity or you add your equity, right? So you can force the equity by doing renovations, changing use class, doing all of that, this, that, and the other, or you can buy your equity from day one. We've chosen the route of buying the equity. Yeah. Now, I know some people don't have that skill set, so they go to forcing it, and they're really good at forcing the equity. We're not as good on that part, so we try and obviously go for this.
So just as a clarification, what we mean there is when you're forcing the equity, you're creating something that will lift the value of the property.
Correct.
And buying the equity means you're buying at a lower price and locking in profit day one.
The holy grail is if you can do both. So if you can buy the equity, so say for example, you've bought a property under its value that's just a single family home, but then you're going to create HMO out of it, you're basically getting 2 bites of the cherry. And that is the holy grail for a lot of people. So that's kind of for me how I look at things. Now, in terms of what we're doing, you know, we don't really have a massive master plan as to where we want to get to and what we want to do. There's 3 things that kind of motivates me and wakes me up every single morning. We love doing deals, like genuinely doing deals. Buying and selling is a really big thing for us. Buying and holding is also good, but for me, buying and selling is where I get a lot of my motivation and passion from. I love working with the right team, and when things go right and everyone's working in harmony and it's all working, it's brilliant. When things go wrong, yes, it upsets you, and yes, you have to kind of go back to the drawing board. But I also think it motivates you when you tweak certain processes and certain things. And then I think 3 is just enjoying having the freedom to do what we do. And, you know, people do ask me, you know, do you work less than when you're in a job, whatever? I work harder than ever, but I really, really enjoy what I do. Honestly, every single day I wake up, you know, I'm blessed and I love to do what we do, and I wouldn't change it.
And the choice, you choose how to use your time rather than you're forced to commit a certain amount of time doing something you may or may not enjoy.
And you know, I work hard on the days that I don't have anything to do. For example, where, you know, it might be the winter months where you're not as motivated, etc. You work hard. And then maybe in the summer months when you do want to go see friends, family, or go on holiday, whatever it is, you've got the luxury because you've worked hard. You can take that time off, and you know, you don't have to feel bad. I used to feel bad about taking a day off. It's like, you know, what's a day off being a business owner or whatever. But now that we've got the team, now that we've got everything set up, and now that I trust the process that I can leave, it's not going to be the end of the world if I leave things for one day. Nothing's going to go majorly wrong. You know, I'm comfortable that things are going to still be okay.
So you mentioned you do a lot of the calls yourself, the calls with the sellers. You probably get, I guess, a lot of people that say, I'm not interested in whatever the offer is. And how do you then deal with those type of leads? Do you park them and follow them up, or do you that one in the bin, let's move on?
So there's in the industry, they call them telephone bashers. So you can have someone that basically just does the initial phone call and gets him to a certain stage and then does the escalation, which is obviously what we do. But I also like, sometimes you know, you can't train the experience. So the experience of understanding things 3-dimensionally, it's difficult to train. So we can sometimes do that. So I can get escalated phone calls, or I can do the phone calls from the beginning. Now, the first thing I'm not, from my perspective, it's not about the property or the value or anything like that. First thing I want to get to is the motivation, right? And if I feel like the motivation isn't there, then the first thing I'll say is, look, try it on the market, go for it for 3 months, 4 months, whatever it is, and maybe we touch base in a couple of months' time or something like that. So I don't get rid of things. I only get rid of things once I know 100% is sold. So not even sold subject to contract. Sold,
you know, transaction
gone through,
completed, it's
done. That's it. So that's when we get rid of the leads. But I will never get rid of a lead just because they're not motivated, because timing is so important.
Absolutely.
So there's a lot of those transactions we will still pick up. I think around 20% of those transactions we pick up.
I think about half the deals we've done over the years where we've been direct to vendor, they've started off as a no.
Yeah.
But it's not no, never. It's not no, not now.
I think the key that I say to people a lot is, when people come to us, I don't want people to come to us this is the first option that they've gone with. I want people to come to us that have tried an agent, tried an auction, done so many different things, and now we are the last resort. Because otherwise they think the service doesn't work, because they think we're either being greedy or it doesn't. So when they know that they've tried 2 different agents, 3 different agents, they've tried the auction, they've got an option, they just agree to what we're saying because they understand it. And it's almost like loosening a jar. It's like, I want someone to loosen the jar for me so I can just crack it open. That's how our methodology is a lot of the time.
I like that. And in terms of de-risking it, so are you doing deals on the phone, or will you send eyes down to visit the property, or do you visit them yourself? Because you're doing this all around the country. It's not that you're just doing.
That's right. So it is nationwide. So we have a process. There is a process that we have to follow internally, but a large part of it is we do what's called a desktop valuation. And we can do that within 20 minutes. We've got the process down to a bit of a T. And that's not just as easy as saying, just click a button and do it. That's, again, a process, it's experience, it's looking at multiple different data sources. And then if that works and they're like, okay, we understand that's the valuation, this is what you're going to offer as a percentage of that, and we're happy with that, the next step is then sending a physical valuer.
Okay.
So we work with a nationwide company that will send valuers up and down the country. And also we've got an asset management company that will then basically sell it on our behalf. So once we've bought it, so if we go down to auction route, we do that internally. If we want to go open market, because we can go sometimes, they will handle that. So they will assign 2 agents, whichever area they've got it on their panel, and they'll basically take everything from there. So they'll push the sales of that. They'll do all the follow-ups, etc. with the agents. So they'll asset manage the agents as well as the solicitors and make sure it goes all the way through to completion.
Yeah. So if somebody's watching this right now and think this is fascinating, because it's not the kind of thing many people talk about, very few people trade, and I think that's because they want to maximize the profit. Of course. They don't want to leave any money on the table. They think, well, if it's worth 200, I want the 200 rather than I bought it for 150. I'm happy to take 180 and leave 20 grand for somebody else. They want the full amount. What would you say to somebody who's thinking about trading as a strategy, about getting started? What would you think is important for them to be considering?
So I think maximizing deals depends on how many deals you're getting in your deal flow. So if you only got one deal at the minute, and you bought it for 150, you can sell it today at 170, but actually if you maximize, you can get 200. You probably will and I would maximize it if I was in that position. When you start to build your pipeline up and you get lots of deals, you've got to start thinking, what resource do you have available to you? So if you need your money for a development, for example, sell that at 170, take your 20 off the table and put that into it. So you need to start thinking in a 3-dimensional holistic approach, not just I can maximize this 200. So the way that we started out and why this all built up was I was getting frustrated because we were buying properties from agents and we weren't able to scale what we're doing because we can only buy so many decent deals from agents. It wasn't that easy, and it's not like that they're all there kind of saying, come buy me. You're not going to go to an agent's shop window and say, I'm going to buy this one. You need to make the deal happen. So I started working with, I bought a few properties from auction, and that auctioneer then, it was a local auctioneer to me, that auctioneer then spoke to me and said, look, I got this property from a cash buying company. I said, what's a cash buying company? He explained it to me. That's how naive I was at that time. This is 2019, I think it was, 18, 19.
So this was only like 5 years ago?
Yeah, this is 4 years ago even. And he said, look, they're looking to put it at auction. Can you give me a price? You completed on the other ones quickly. Can you give me a price where you can complete in 2 weeks or 3 weeks? So they call it a trade price. So give me a trade price. And a couple of them, he said no, that they didn't accept. And 2019, if I can take you back to there, we're going through the referendum, Brexit, all sorts were going on. So it wasn't really...
uncertainty in the market.
There's a lot of uncertainty, a lot of shaky market, and we just continue doing what we're doing. And we bought a few deals from them, and they were the best deals we've probably ever done at that point. Fast forward to the Boris bounce back in early 2020, those companies did not want to negotiate or do any deals. They wanted everything to go to the market or auction, and we basically got, we got out of the market. So the best deals we did was buying from other cash buying companies, which forced us to then set up our own. And we do deals with people today where they're traders or they're well known. They want to build a property portfolio. They come to us because they know they're going to get the margin.
Yes.
So they'll buy properties from us where it's, so say for example, it's a property where there's margin in it. By the time we buy it, put it into auction and sell it, there's a lot of frictional cost. They might come to us and say, we'll buy this from you slightly, maybe less than what you're going to sell at auction, but it means you don't have to pay stamp duty, you don't have to do this. So we'll do what's called a back-to-back deal. So just to explain it for people listening, a vendor comes to me and says, I want to sell this house for 100,000. It's maybe worth, I don't know, say 140, for example. We'll say, okay, fine, we'll buy it for 100,000. You might come to me, Saj, and say, look, I've got a lot of property in that area. I like that area. I know it's worth 140. I can't get very much discount in there. I'll pay you 120 or 115 or whatever it is. And we'll say, okay, fine. Rather than us buying it 100, paying the stamp duty, paying all the costs, we're in at maybe 110, 112, then we have to sell it at, maybe 120, 125 to get out of it. We'll say, Saj, we'll sell it to you at 115, but we're going to exchange contracts, and then we'll do a simultaneous exchange and completion with you, and then complete on the contract. So it's all done on the same day, and there's something called stamp duty sub-sale relief as well, which essentially means I don't pay any stamp duty on that cost. I've just got my legal cost to pay.
Yeah.
So that means you've made a bigger margin because we've paid less frictional costs and fees on that.
Yes, that's interesting. I think some of the Islamic finance models work in a similar way where the bank is effectively buying it, selling it to you the same day as well. That's interesting. Have you ever got involved in more creative type contracts where you say, you've got that agreed, say, for example, the seller. So rather than purchasing it, maybe it's just an option agreement that you're signing as opposed to committing to buying. or an exchange and maybe delaying out the completion.
Yeah, so we've done a lot of, have you heard of auction underwriting at all?
Yes.
Yeah. So we've done auction underwriting.
Explain that for somebody who's not familiar.
Absolutely. Let's just say a property is an auction that you found at £100,000, for example, and you are comfortable to buy that property at £120,000. You're comfortable with that. You've read the legal pack. You've seen the property. You're happy with that. Now, an underwrite is effectively an option, right? So it's what we call a call option, basically. So you've got, if that property sells for anything less than £120,000 at auction on the day, you are committed to buy it at £120,000 under auction terms and conditions. Whatever happens, you're paying 120 for that property. If it sells at 100, you commit. If it sells 100, it sells at 110, doesn't matter, you're paying 120. That's the risk. That's the downside risk. The upside risk is, I might agree with you, if you're the vendor and I'm the buyer, I might agree with you, Saj, we'll split it 50-50, anything above 120. So as Saj, he's got the actual guarantee that this is selling no matter what at 120. Remember we said about the certainty at the beginning? You are certain this is selling on the day of the auction at 120. And if it sells for 130, I make 5,000, you get 125,000 altogether. So you make 120 plus your 5. If it sells for 140, you're making 130, I'm making 10. So that's the creative way where we've done a lot of the time. We know we want to buy that property at that price, we're happy with it, and it's sold over, as an example, and without buying the property, without doing any of that, and we've actually made an uplift in value, and we've made 10, 20, 30, 40,000 from that.
That's a very smart way of approaching it. And you can see the benefit for the seller where they've got the certainty that this is selling on the day at that amount, at least. And if it's more than that, they're still going to make some more money on it.
Yeah, absolutely. I mean,
we're carrying the risk on the other side.
So auction underwriting, again, not all auction houses do it, just as a disclaimer. Not all auction houses will allow it. Not all vendors will allow it, obviously, as well. So it's spotting the ones where they will, and it's a numbers game as well. But that's a good opportunity. One other thing, again, that a lot of people don't probably know about is something called auction arbitrage, which we do quite a bit. So that's spotting a property that's not going to sell very well in an auction. There's a whole range of lists why or reasons why it won't. Buying it and then putting it into just another auction without doing anything to it, and actually making a margin on that. And
so you're changing the audience effectively.
Yeah, you're changing. You're effectively taking something from a dusty warehouse, right? That's not got a window, to putting it to basically cleaning it up, making it shiny, and putting it in a shop window. Yeah. And you're going to be able to sell that for more money. And that's the auction arbitrage model. So we bought lower value, but just to give you an example, we bought something where an executor was selling it, went unsold twice at auction. We picked, I think they had it on for a £44,000 guide price, didn't sell. We managed to agree it after the third time it went unsold at £43,500. Had metal shutters on it, no viewings, etc. We removed the metal shutters, we allowed viewings, put more pictures, put a floor plan, did everything properly in terms of marketing, and then we ended up selling it for £58,000 in another auction a month later. Right. That's all it was.
Yes.
So yeah, there's opportunities and everything. If you want to just sit back and you want to try and have, everything work itself and everything happen itself, that's not going to happen. I am still actively working in the business.
It's not a passive business.
This is not passive. This is not me saying I don't enjoy property. It's just a medium. This is me saying I love what I do. I love doing deals. And whether I'm sat, because I travel quite a lot, whether I'm sat anywhere in the world, I'm still doing this stuff. I'm on the phone, I'm on my laptop, and we're getting stuff done, So it's someone that has a passion for it, but also someone that has the effort to put into this to make it worthwhile, because the money and the profit in it is massitive if you can put the time and effort into it.
Because it's high value transactions, and you're making a percentage of those, and you're doing volume, which is what makes it so exciting and attractive.
I'm going to say the story. You're absolutely right about that, and this is the story that relates exactly back to what you've just said now. And I've not told this story to anyone yet, to be honest with you. And this is a really recent story, so it's quite fresh. We bought a 3-bed semi-detached house down in Croydon at the time. We bought it well. I'm not going to go into figures, but we bought it well. We ended up selling it at auction at $329,500, right? And we thought we would probably get 340, a bit more than that. So we thought we did okay. It wasn't the most buoyant auction at the time, but we made a profit. We're happy with it. We're going to move on. The guy that bought it registered on multiple properties at the time. So it was a property trader that bought it, quite a prolific guy in London. He hasn't read the legal pack, hasn't even viewed it. He registered for multiple properties, and he just bid on as many that he thought looked cheap. So he ended up buying it. Now, he put down a £5,000 deposit. And when it came to it, I called the auctioneer, called me actually the day after. They said, look, we've not been able to take the full 10% deposit from this guy. He's requesting 8-week completion and a key undertaking. And I instantly thought, okay, this guy's clearly trying to back it and try and, you know, sell it on, as we discussed obviously earlier in the interview. So I understood that. Now, I could have been completely sort of ruthless and said, absolutely not, he has to complete. But that could have opened up a can of worms in terms of a legal process. And all I had at that point was £5,000. Yeah. And I still got a good price. I still got a good profit. So for me, I looked at the big picture and I thought, look, in the interest of getting a deal done and getting this sold, fine, we'll agree to it. So we agreed to 8-week completion and a key undertaking. And it was going to get into a bit litigious, to be honest with you, but we tried to get it outside of that. But he then tried to renegotiate. Oh, well, what if I can get 6 months? And because we started to negotiate,
since you gave it too easy. So
exactly. So he sensed that we were. So we then went back and we were firm. We said, actually, we're going to go back to 4 weeks. And then he came back and said, no, we'll do 8 weeks. Anyway, the long story short, he put that property with Savills auction 2 weeks later, and it sold for 364. So we made nearly £34,000 in a 2-week period plus 4 weeks to complete. Now, the moral of this story is we don't mind other people making money as long as we're making money. So it's a win-win. So everyone's winning at this point. So it's a win-win situation. And other people could have looked at that and put their ego to play and say, I'm not going to let someone else make money off my deal. Yeah. But we look at the big picture and we're like, we've made money, we've sold the property, he's made money, he's sold the property. Everyone's out happy. You know, and that could have really become quite litigious, and we end up not making anything from it, and it just drags on and on and on. You know,
it's like a wholesaler. You're sitting there selling lots of things in volume, knowing somebody else is going to make some money along the way as well, and you're okay with that, and that's fine because you're still making a profit with what you're doing.
That's exactly. So we buy. I always say to people, we kind of buy it trade price, sell at wholesale price, and then they go to retail basically. So, and a lot of people don't really understand this, but in property there is 3 prices: there's trade, wholesale, and retail, and you just need to decide at which level you want to come in. The trade is so difficult to get into. It's so competitive. It takes so much operations, sales, costs. So what I always say to people is, do what we did at the beginning. Work with traders, work with cash buying companies. You won't get it. You're not going to get it at retail price because obviously you're not going to buy it that, but you can still get it at wholesale price.
Yes.
And some traders won't work with other people. They'll say, no, they almost look at it as they're kind of losing their dignity if they sell it too early. They want to see what the market's going to. They might sell it on the market and it might get less than what someone might buy it at trade price. But that's how they work. We look at things and we're like, I'd rather get a deal done, because the biggest, I had a mentor of mine who was not an official mentor, but it was just someone that I really looked up to. And he always said at the beginning, he said 2 things. He said to me, everything's for sale at the right price. It doesn't matter what the asset is, everything's for sale at the right price. And you're never going to go bust making a profit.
Yes.
That's the 2 things as a trader you've got to remember.
That's some really insightful things there. When it comes to locations in terms of your buying, because you're buying around the country, your risk level increases because so for example, we buy around Birmingham, some of the surrounding towns. So we have relatively good knowledge of the area. But if someone's offering me something in Manchester, I haven't got a clue about Manchester. Yes, there's some tools and things we can use. But are there certain areas that are no-go or certain social demographics to say we don't buy there?
Yeah. I mean, look, as a trader, we build on our knowledge and experience. Every day we're learning, right? So I can get a property in an area where I'm not very familiar with, because we're familiar with most areas now up and down the country. Because generally as you start to buy, you start to speak to more agents locally, you speak to other people that know the area, etc. And we have a really good network of people all around the country who basically will give us, information on certain streets or whatever it is. So it's just a general network, and we give back to those people as well. So it's reciprocated. There are certain areas I won't buy. The reality is every single property in the UK is worth something. It's got a value to it. Yeah. So we would probably buy something anywhere. The only thing is just whether the value of what we're going to pay for it works for the vendor. Yeah. But, I know people that have bought garages for £100 down in Wales, for example, and managed to sell it at auction for £1. Yeah. But they've made money because in the special conditions they've got that, you need to pay £2,000 paid fee, £2,000. So everything's worth something. Everything's got a value. It's just perceiving what level you're willing to pay. So some of the worst streets in the UK I know very, very well, because they come up quite a bit. And it's not that we won't offer them, we offer, but our risk appetite means that we're going to offer way lower than what we want. So in an ideal world, it's almost like when a builder's too busy and gives you a really high quote, it's like, we don't really want to buy it, but if you really want to sell it, this is the price.
Yeah.
Just because we're not motivated to buy that really.
Yes, I remember when very first when I got started, Birmingham prices were still quite strong, and I'd heard Stoke-on-Trent was quite cheap.
Yeah.
In fact, you could buy a house for £10,000, but I very quickly discovered why it was £10,000.
Yeah, there's a reasoning.
Yeah. You touched on auction conditions, special conditions just there now at auctions. Let's talk a little bit about auctions, some of the risks involved, or some of the things that you've experienced that maybe is not so obvious. It's not all rosy like Homes Under the Hammer program that we see.
Absolutely. So look, auction, it depends what you're buying, who's selling it as well, and that's the key. And a large part of the time, you're not going to realise you're buying it from a trader, because the trader might be, as we said, being a bit more creative, so their name's not on the land registry title, etc. So you won't know that a trader's selling it. Now, the reality of auction is you need to understand not reading everything that's in the auction pack. That's one thing. What's not in there? What's missing, right? Because a lot of people don't think it's like, I've read everything looks great, brilliant, but what's missing from there? Do you have a checklist as to what's actually missing from the auction pack? The other thing is understanding, obviously, from a building perspective, is the building structurally sound? Does it have an environmental health notice against it? Is there a local land charge, for example, that the council have on it? I could really go on for ages on this, but there's a lot to think about when you're looking at buying from auction. Obviously, consulting with a solicitor ahead of the auction is so important. And I just think auctions come with experience. People should look at auctions in a good way, because yes, it's quite risky, but at the same time, for you have the guarantee of buying it at that price. If you can get it at the right price, there's some amazing deals to be bought from auction. Honestly, we bought some of our best deals from auction. It's just understanding what are the problems, and there are always problems. It's just understanding what they are and can you solve them.
Yeah, can you solve them? That's the key thing.
Yeah.
If it's a problem that's fixable, then there's going to be an opportunity to make some money.
Absolutely. And people don't realise it. It's like, why hasn't the owner done this? Why hasn't the owner got planning? Not everyone has the resource or the capability to do it.
Yeah.
So, sometimes don't go looking for problems if there genuinely isn't problems. Think about them if there is, but don't go overboard by thinking there must be a problem, and just sometimes there's just deals to be done, honestly, and it's clear cut.
And you can't get emotional with this. I think it's a commodity, it's a piece of stock that you're going to move on. There shouldn't be any emotional attachment to it, and in the decision making either.
Yeah, and the key is to buy at the right price, where you're comfortable, and just make sure whatever happens, you've got multiple exits on stuff.
Yes.
If you couldn't get planning, could you sell it as it is? If you didn't want to refurb it, can you, just how can you exit this property? Can you do service accommodation if single lets don't work anymore, etc.?
Yes. So you've been doing this for the last few years. So let's go back a little bit further. How did you get involved in this? You've been in business for a little while as well.
Yeah. So my background is I'm a pharmacist, and when I was in pharmacy, I did pharmacy for about 2 years for the corporates, and I worked there. I'm the type of person that kind of felt like I reached the top of where I could reach within that quite quickly. And I just wanted a new challenge, It's almost like I felt like I was a button pusher, just pushing buttons every day. So the next kind of step for me was I set up a healthcare business where we were helping a lot of the UK manufacturers export their products abroad. I started that from scratch. It very much was me knocking on doors without anything really, just a name saying, look, I can help you to create more income from your exports. It's not going to cost you a thing. I'm just going to put a margin on top of your prices. And if it sells, you make money. If it doesn't, you have no cost, and no strings attached. One company said yes to me, and that opened a massive amount of doors. We made some money from that. And then I was looking at what do I do with that? So I can either go out and spend it like a lot of people do when they're younger, or do I think about the sustainability of this money? And for me, it was everything's about sustainability. I want to do things for the long term. So the first thing I did was, I was living in Manchester at the time. I looked at Manchester, and for anyone that knows Manchester, Salford and Media City was real, like it was just in the development phase at that time. This was back in 2015. So I saw all of that going on. That was the shiny stuff. And all I did was I looked at second-hand properties in that vicinity that had already had all the new build premium knocked off it. It wasn't as shiny and sparkling and stuff. And there was a property that I was supposed to be buying, 2-bed flat there for 110,000, which I ended up losing out on. And the agent just randomly called me up and he said, I've got an Asian lady that owns this flat. She's moving back to China and she needs to get it sold. It's not on the market yet, but I know you missed out on that and I just felt for you. But look, you can get it at 93,000 because we've not marketed it yet. She needs it. She just needs a sale. Now, I bought it with a mortgage. I think it was NatWest that I bought it with at the time. It was a personal mortgage, bought it in my personal name. That was it. I paid 93 for it. It was rented out at 650 at the time. I think 2015, I refinanced it at 150. I didn't spend, it wasn't I didn't need to refurb or anything like that. I've done nothing to that flat, and she's gone up so much in value. And that was the starting point for me. Wasn't anything sexy, wasn't anything discounted or anything we're doing now, but you just need to start.
Was there a penny drop moment where you think actually property needs to be the thing, which is what you want to base your business and career on?
I think, do you know what? There's a lot of times where I could have gone and diverted outside of property, but the main thing that people have to do is choose one thing and stick to it. Because if you keep, I know a lot of people suffer from ADHD and stuff like that these days where they don't know, it goes undiagnosed, but a lot of people can't focus on one thing at any time and they want multiple things all the time. I decided I'm just going to focus on one thing. Yes, I've got multiple businesses, but they're all around property. And I built on my knowledge base. I know everything within property to a degree, but I also got the network that knows things that I don't, that I can go to. And now opportunities are coming out where I never even thought, just because I'm sticking to one thing. So if you can stick to one thing for long enough, multiple opportunities will develop and come from that one thing.
Yeah, that's amazing. I resonate with so much of that. And if I think about my journey, it was very scattergun approach at the beginning and with very little to show for it. The results only started happening actually when I started getting the blinkers on and not get distracted by all the noise and everything else, and just do one thing. Do that one thing well and say, okay, that's running. Now let's do something related to that, also property related, and grow the business in that way. So,
and I think that's what I say to people. Like, look, we've done rent to rent, we've done service accommodation, we've done HMO, we've done all of this. We actually did a rent to rent HMO, rent to rent service accommodation in Birmingham, 2018, I think it was. None of that worked. Well, none of that worked for us at that time. It works for other people, but none of it worked for us at that time. But at least we tried it. We said no to this, no to this, no to this. And then we found stuff that worked. So I think people need to learn from also doing. So I think the theory is really, really good. And for me, I didn't do that when I started out, but it would have accelerated my journey, not only being in a network of people, but also having the information there. But I had to learn the hard way through doing. But I think having a bit of knowledge, having a bit of your network, plus a bit of the actual practicality of doing it day to day, all of that combined is really where you're going to accelerate.
So if this has been an amazing journey, really interesting background and conversation with you. What's the best way for people to connect with you if they want to reach out to you?
So I'm quite active on Instagram and on LinkedIn as well. So my name is Saif Derzi. It's Saif Derzi. I'm sure I'll send you the links as well.
We'll link that in the description.
Yeah, but Instagram and LinkedIn are probably the best ways for people to contact me. And, I'm happy to always sort of speak to people, help people out as well within reason. I can get quite busy, but I always try and endeavour to respond to everyone.
Fantastic. Saif, thank you so much for your time.
Thank you very much. Thanks for having me, Saj.
Thanks for coming on.